All right. Good morning, America. Good evening, Europe. Asian Australian friends. Night owls. Hope you're doing all right. A little bit of a crazy week here on the home front. My daughter has not been doing too well health wise, so I haven't been able to do as many streams as I would like, but perhaps we're settling down from some craziness in price action from last week. Perhaps not. I'm slowly getting my databases changed over from the old green banner there and this one. And to remind you, you guys will get some access to this. I just need to get it set up where it's scalable and has a lot of the bugs worked out. Let's just take a look at some regressions today. If you guys want to look at something else, we can. But in light of where we can store value, of course, things generally go up. Actually, I guess you could probably say companies generally go bankrupt. But before they do, if they're decent blue chip stocks, they go up. If it's gold, silver, it goes up. If Bitcoin, it goes up. But we want to try to measure the variability around the trend to see what is perhaps more risky than another investment. I want to clarify as well. Some people were saying, sometimes I talk fast, and if I said gold goes down or could go down, it's of course only on the short term. I have no problem with gold bugs, and even though I'm partial to Bitcoin, I'd like to hold more gold. That's fine. But scarcity is what it is. So let's look at it all right here. We're going to look at some blue chip stocks, gold, silver, Bitcoin. All right, so this is a log linear space back to 2008. All right, you get the most helpful for these stocks because they bottomed out at the start of 2009. All right, I'm just cherry picking 12/31/2008, but this is how it looks. I have some stats below here. If you look at the second line, this is OLS, okay, ordinarily squares, and you got that R squared 97%. All right. So Apple moves exponentially. All right, and the CAGR of this black line is 27% per year. Pretty enormous. $5 split adjusted back in 2008. Now the trend 307, the actual price 274. But what I want to do with this little exercise today, and I don't want to make it too much of a lecture, so let me know if you guys have questions, is I want to focus on this. All right, this is sort of course, this kind of looks like a clean, nice trend line, right? If you just draw these bars after any period, you can see it looks nice, generally. But what was really going on was this gray line. All right. As Apple was quickly rising here during the jobs era, well, jobs era actually ended already here in 2011. But he was, even though he was suffering health-wise, he was in his prime here, right? Releasing the iPhone 2008, 2009, 10 with the iPad, whatever. You know the story. So the slope of the trend is obviously way faster here than it is of the all-time trend. Okay, and then it levels out, even goes back down and around. But what I want to look at is how the price, all right, the green line is going to be the same colors on all these charts, how the green line moves around the gray line. That's really what we want to look at. Okay, so here's Apple, 27% CAGR on an exponential curve, 97% R squared since 2008. Here's Amazon, a little bit weirder. All right, these are quantile regressions, by the way. They're not using the multiples that I use sometimes, although I will bring that back with this software as well. Let's just check really quick. 95% R squared, 28% CAGR, pretty good. It's 28% per year, pretty good. Blue chip stock, that's the slope annual return of the black line. All right. But again, to check the variability, I want to look at how the price actually moves around the gray line, because the gray line is really how the trend line is sort of is settling down every day. All right, and you can see what it will settle down eventually into what you see, which is the same thing as the OLS. Okay, so the point is, just keep that in mind. The gray line, and I could probably make it fatter or different color, but the gray line shows the evolving trend line, and it's exponential. Straight line on log linear. Meta, Facebook. Wild drop here when the metaverse, I don't even know how the metaverse is going, but investors were hating it after the COVID boom. Now it's back up on trend. 85% R squared, not as good, you can see, and 23% CAGR, 22.8% CAGR. All right. NVIDIA. Again, the lines, the straight lines that you see, not the, right, the straight lines around the price are taking all the data in this window, which I'm cherry picking from 2008, but is what it is. Nice blue chip stock, 93.5% R squared, CAGR 51.8% per year. Wild. All right, but we're going to analyze, coming up, we're going to analyze this. All right, next one, Procter. My namesake of this channel comes from Procter. Fortune 500 company, major company for over 100 years. And even here, you see some big busts, all right? But it does get back to the trend. Okay, and specifically this evolving trend. It's actually less wavy than you look at some of these other ones, right? NVIDIA, Meta, it's just a wavy trend. But as the OLS evolves for like a blue chip stock, like really sort of a non-tech, really all the other stocks are tech stocks here. It's just a blue chip Fortune 500 company. It's less wavy. 96.5% R squared, 10.5% CAGR. There's a more normal CAGR, but that's the CAGR of the trend line, the black line. All right, so now, and we'll bring in Bitcoin. I want to look at this deviation from the trend, all right, regression, deviation. So what you see here with Apple is the same time period. All right, let's just remind you how the Apple trend looks. And this is where the price was. So the black line, right, the 0% is the trend line. If it had a R squared of 100%, it would stay on this black line the whole time. It doesn't, of course. It's not a science. It's an art. But here's how Apple deviates from its exponential trend, which is a really good R squared. And it's a great return. I'm not saying don't buy Apple. All right, but the trends can be The deviation can be high, right? 70% above the trend or 45% below the trend. Okay. But what I'm removing the 30-day because there's actually a lot of noise in the 30-day. For this one, I just want to look at the 365. This is standard deviation. So what you do with standard deviation, you take, if percentages are positive or negative, we make them all positive. And we take a bell, we assume a bell curve. So what I'm assuming here is 2/3 of the time, which is standard deviation, you're going to go up or down by this percentage, up or down. All right. So when the more volatility, it'll be up, less volatility, it'll be lower, closer to 0. All right, so just look, the volatile times, 18% for Apple around the trend. On the less volatile times, 6-7% here, 22%, 19%, and here we're down to like 7%. All right, let's look at deviation of Amazon. Just so you remember, this is the Amazon chart. All right, oops, this is deviation. You know, again, being buy and hold is totally fine with all this. I'm just want to, you can imagine what I'm leading up to, being a Bitcoin fan that I am. But let's look at the deviation around the trend line for Amazon. It could be 10, but as high as 14% on an annual basis there as well. 14%. Oh, sorry, 17% here, 17%. 10, 11 here, 17%. And even here as high as 19% as we're going way below trend on the adjusted close. Okay. 5% at the moment. That's the Amazon trend and deviation from trend. Facebook, obviously I remember when it was getting started, laying off some people saying it's going to be a long road. And it was. And on a nice little trend here, a big drop, but a nice little trend. Investors seem to like Zuckerberg as much as some of us may not. Can't argue with the ways around the company in general. All right. Standard deviation over a year gets up to 24% here, 24%. Also here, 27, now down to 11. NVIDIA. Obviously enormous gains, specifically from this time when the AI boom started, which is right here. Okay, show you the chart again. NVIDIA, enormous gains, went from $12 split adjusted all the way up to 120 and now 190. But again, the one I want to focus on here is the 365 standard deviation, up or down around the trend. NVIDIA, if you look at this, it's always making a new trend upward. Pretty solid. But the annual deviation, which some people can call risk, and this is deviation from the trend and not just the daily deviation, 60, 70% at times. This could be Maalox moments for certain investors. Now Procter. Here's a Procter chart. Remember, this is the least exciting stock, 10.5% CAGR on the OLS. Here's the deviation from the trend. So the trend line, the exponential trend is here. Actual deviation is all around. It's a blue chip stock. 13% annualized here, down to 4.6%. What this is saying again is at any given time during the year here, the price of Procter was either 9.6% above or below the trend, 2/3 of the time. That's the expectation, the deviation of the trend. All right. So lower would be considered better, again, as far as least risky or volatile. Sitting at 8%. All right, so you know what I'm building up to. Good morning, sir. Hello, Boron. Building up to Bitcoin, of course. Now, this is log linear. You guys know this curve. Showed it a lot. Working into the new chart software here. This is the quantile regressions. That's why we got the smooth lines all the way back, not my wavy lines, which are on multiples. That's a different thing. And we'll pull it out so we can see some price indications in the future. But anyway, just to look again. The focus now is on this. It's the deviation around the evolving trend. All right. 96% R squared. 62% CAGR on the OLS itself. That number is very simply taking during this time period, which actually starts Bitcoin Pizza Day, the black line to black line just connects the dots, but it's not a constant. So unlike Amazon, Meta, NVIDIA, Procter, you can all draw straight quantile regressions here, and you can get an exact doubling time, a constant doubling time, which really I should put in the stats here next to CAGR. You take that CAGR, 10% CAGR doubles every 7.2 years. 10% CAGR doubles every 7.2 years. The 7.2% CAGR doubles every 10 years. It's constant. Bitcoin does not have constant growth. It's very interesting. It has this sort of network, quicker at the beginning, slower later, curved line on log linear scale growth. And we're cheap. We're cheap right now. But again, in light of all these deviations, let's look at Bitcoin. All right, whoops, let me go here again. We're going to look at how the price actually was, what percentage above or below, where the power curve was at the time. All right, so the power curve did not look like this back here in 2010, 2013. It wasn't as beautiful. This is the all-time data. It looked like this. It was much faster here. We got, then we crashed, faster, crashed. And then really since 2016, the power curve has been pretty close. If anything, a little bit extended higher, although we've been right on it for the last couple of years. So point is the deviation of the gray line, not the black line. I did the black line the other day, but this is better. All right, so here are the deviations. Obviously much bigger in raw value deviations than anything here, right? Look, Apple, 60%, 80% from the trend. Amazon, 40%, whatever from the trend. Bitcoin's deviation has been huge, all right? 7x, 6x from the trend. But as time has gone on, the deviation's gotten smaller in both actual terms and in standard deviation. Now again, you can see where this is kind of an academic calculation, right? Because it holds on for a year, then it's going to drop. Hold on for a year. So this is not actually that helpful here. But as time has gone on, and we can see what really happens, or really has happened, this line for sure, the annual standard deviation, or that is the 2/3 of the time, where could we expect in a year window the price to be relative to the power trend, it's gotten pretty low. Let's zoom in. All right. Here was pretty high, 2022. Big booms, double top in 2021, and a fall. It's a 51% deviation up or down, as you can see in the course of a year here. But really, look, since start of the ETFs or end of 2023, 7%. deviation around the trend. Yeah, we'll get a little bit higher here. It's a 20. And now it's a little bit higher with this drop, right? Deviation is always positive number, 14%. But I mean, it's not that far off from blue chip stocks, and in many cases it's, it can be below that. Nvidia, of course, super volatile stock at the moment. Meta got up to a 25%. Let me even take the actual, let me just look at the averages. All right, Meta got up to 25. Amazon gets up to 20. So Bitcoin, of course, was doing that a lot more back in the day. But now, even with these crazy moves, which seem really crazy, the deviation relative to the power trend is not so insane. Might seem crazy, but it's not that crazy. All right, again, you guys know I'm a caveat emptor guy. Do what you want. Do what you want. But when we get it down into these blue bands, all right, it's always gotten back to the trend line. Always, every single time, even here. So these are relatively cheap prices. For fun, let's go out. This is a quantile model, so it's a little bit different than my, sorry, that's, yeah, that's fine. I pulled this in, it's very finicky, more finicky than my other chart. It's a little bit low, I think. Yeah, we're 67. We're 67.9 at the moment, but whatever. I pulled this in at 67.1. Let's go out to year-end 2027. There are your numbers. The OLS, 235K. The worst percentile quantile, 122K. The best, 700K. As you all know, I was hoping to be talking to you by the end of last year, just counting the days that we'd be above, the 8 or the 9 here. We didn't get above either. Not the 100th, not the 90th. Barely kissed the 80th here. Right when the rumors of the U.S. sovereign Bitcoin wealth fund, strategic Bitcoin reserve were running rampant. We didn't even get back there. But the trend is always up. All right. And another thing I probably need to show is trailing 12-month, at least for power curves, because they're not the same, right? But the trailing 12-month on the curve here is about 40%, a little above 40%. All right, and 40% is, even if you look at Apple, is better than what Apple does, although Apple has killed it over the last 15 years, 18 years. 27% CAGR. Of course, it hasn't always been on it, right? But that's what the slope of this black line is. Can project this out to end of 2027. 483 on the OLS. Want to remind you, I'm going to get these charts out for you. A lot of people have always asked, can we get your charts? Because I'm testing all this stuff locally. The answer is yes, they're coming. They're coming. But look, yes, it's a big drop. Yes, it's, historical levels sort of below trend. Negative 45% below trend, which is not as bad as 2022 yet, but we clearly could get there. We went down 60, not talking from the top, just from the trend, 63% below, 65% below the trend. That snap turnaround from when the pandemic started, 38%, 54% here, 2018 puke, and good old crypto winter, as they called it, 70, 80% drop from the trend. So look, both in actual terms and as a standard deviation, though the waters might seem stormy, they're actually getting much less choppy than they used to be. And you can see that by this standard deviation of the deviation from the trend, 14%. All right, let's look at gold. Uh-oh, did I just delete a chart? Well, I'll show you maybe the gold chart, and then the silver deviation, because I think that's what I pulled up. I need to pull up both. One second. Do I have it? All right, here's a gold chart. Okay, this is on a, I'm going all the way back for this. I'm not just looking from 2008 because I think this merits a full view, right? See where we are, see where we could go. When we're going to look at the deviations, remember, it's this line that we're analyzing. It's not the solid black line, because that is only after all the data has been plugged in. At the time, we had less data. So it's this, which is helping it. It's not a bad thing to do it this way. Anyway, R squared is not great, 78% since 1970. Sometimes I do 71, sometimes I do 70. This was actually 1970 December. 5.4% CAGR. 5.4% CAGR for the gold bugs. Again, I got no problem with gold. I'd like to hold more gold. Over the last 55 years, 56 years, this thing has grown at 5.7% per year. Sorry, 5.4. 5.4. All right. Now, let's look at the deviation. One second. Still. Almost there. We're going to look at the deviation of this around the trend. I'll take off this. All right. It's a little bit different. 20-year bear here. 1, 2, 3 major spikes in the last 55 years. Again, a lot of people think this is somehow going to stay up here. I don't really, but I'm not hating on gold. I'm just showing you how gold works relative to its trend. it has been a relatively calm asset, all right? Except for the spikes. When the spikes happen, then, you know, they can get up to a 40% standard deviation. We're at 20 right now. We peaked out the 2011, right, which a year later we maxed out at 22% standard deviation. But actually, you just look at the average, it was obviously crazy. 115%, now we're 136% above trend. Hello, Daniel. Yeah, I mean, I'm very confident in that. This is the point. This is the point of these charts. Show the relative risk. Not as fun where everybody thought we'd be, but again, think back to October, November, December when everybody told you the 4-year cycle was over. I have no idea what's going to happen this year, but you know, these are the numbers. So anyway, gold is it's interesting. Stores some value. Some central banks buying, not that many actually. I've shown that chart. I can show it again. And we're just going to have to see how this plays out. All right, silver. I think all I have is the trend deviation. Yeah, here's silver on the deviation. Same deal, right? 1, 2, 3. Silver, $55 here now. Whatever it is. What are we at for silver? $82. So even though I do think gold and silver are the most sort of classic kind of base money comparable assets to Bitcoin, you know, price-wise, they actually behave quite differently. Yeah, they can have huge, you know, these spikes for both gold and for silver and for Bitcoin are way bigger than even NVIDIA's spike. Where's NVIDIA here? It's Proctor. Sorry. There's NVIDIA spike. 250%. Right? We maxed out 250%. Obviously, gold and silver and Bitcoin can go way higher. Actually, gold's even lower than NVIDIA. Silver's higher. We'll see for how much longer. There's I'm trying to zoom in right here. We're actually down to here at this moment. But if you look at it this way, it's actually not, I'd say Bitcoin is similar to the movement of stocks around its trend than gold or silver. Meaning it can have spikes, yes, but as of right now, it's, you know, it's getting closer, getting much closer. And it seems less likely to me that we'll have these huge deviations in the future. Maybe with some crazy geopolitical event, we can, you know, pull another 200%, 2, 3x, right? Like gold and silver do. But really, if you look at, you know, these deviations right here, I mean, this is NVIDIA, this is Proctor. These are kind of normal, around the trend type movements. Hey, how you doing? Year over year, dormant 200-day more. You think so's interesting. Yeah, I need to get those up and running too. Soon, I'll be able to pull them up to show you, but I don't have it. But that's the beauty of Bitcoin. You can see the different UTXOs, the amount of coins. Wonderful thing about AI for sure. I actually have it in my database. I just don't have it pulled up nicely. But I need to get it up there. Thank you for that. Definitely not. More of a more of an Excel guy originally. Although Claude has helped me a lot with this. Old JavaScript. um, there's good stuff coming though. We'll get. Whoops, that didn't show up right. I gotta fix that. We get a lot of economic data coming in, and that's my hope is that we can plot it with the money supply, plot it with different economic indicators like GDP, like how how much consumer spending dollars or dollar equivalent different societies have, and then how BTC is growing. But yeah, I agree. I mean, there's really nothing better than looking at UTXOs and addresses and the HODL waves. In my opinion, it's hard not to be bullish when you look at something like this. Right? They said it was too volatile. Volatility's come way down. It also, at least for now, and we're in a different world since 2008, a different monetary world. It does show, the relative power of these tech stocks, Magnificent Eight, whatever, versus, even some other blue chips like Procter. All right. 10.5% CAGR, but all the others just killed it. I'm very much cherry picking, right? But Nvidia 50%, Facebook 23%, even with this drop, right? Comes back. Amazon 28% below trend, but 28% on the trend. If you cherry pick the price, it's 29%, right? So if you started here, ended here, it's 29%. And Apple 27% CAGR on the line. So Bitcoin, remember, comes down. The growth rate comes down, but it's still 40, a little bit under 42% a year. So be calm. It does seem to me that it's better to go lower quicker, right? If I had to guess, I would say this is, since we're getting so close to the lowest trend, perhaps we bounce around here a little bit, but then we might start trending up even all year. And then maybe that plays into Stephen Perno's harmonic Bitcoin power law projection, where 2027 is actually the blow off year. Again, just theorizing here. Right? Because at this time last year, we were still coming down. At this time, not last year, last cycle, right? We were here. This is precisely where we were last cycle, right here. February 2022. Here we are, February 2026. We're already close to the bottom. So that's different. But again, I don't see that it invalidates the 4-year. Same with 2017. All right, here's where we were after that cycle. Still had a long, rough year to go, and then a puke. And then it wasn't until spring of 2019 when things started to look nice again. Same thing with here. February 2014, I went to Ukraine, checked out the Maidan revolution. Bitcoin was, really, it even had 2 years to kind of fall here. Kind of didn't fully bottom out till, you could say that it was end of 2014, but really it was end of 2015. So the 4-year cycles aren't perfect, but I would caution people about saying that we're on some different plateau now. Let's see if this works. Nope. Hold on. Let me reset it again. The thing with this new thing is you change one thing and then everything else breaks. Yeah. Hold on. This is slightly buggy, but still. Again, the tooltip's not going to work. But again, what will turn this trend line into a straight line on log scale is to go not log linear, but log log. All right, so we're log log here. All right, the thing, Bitcoin Pizza Day, May 22nd, 2010 here. Here's 2015, 2021. But this is measured in days since the Genesis block. So that's how a power curve or a network, which a lot of networks grow in power, cities grow in power. See Jeffrey West. That's why it turns into log log, and it becomes that sort of that nice trend line that you can't unsee. Whereas here, log linear. That's how exponential trend lines work. Pack it up. I mean, look, buy and hold. Call it buy and hold. Call it hodl. It's a good strategy for many stocks. Not all stocks. Remember, most companies go bankrupt. But if you're talking blue chip stocks, Bitcoin, gold, silver, they're all going to move lower left to upper right one way or another. Some are just going to be more volatile than others. And I am struggling to see why this time is going to be different for gold and silver. Maybe you guys know, but I'm struggling to see it. Why all these $4,000, $5,000 mines are going to remain profitable when they were completely dormant here. Gold, silver. Any other charts you guys want to see? This was the message for today. I know everybody doesn't, or I know a lot of Maylux moments out there. I know people want to know how low can we go. But look, I mean, this is the point. This is why you run these regressions. Easier to look at on log or linear. Nice power curve. So I said in the fall, I said, let's wait until January, February to really call the 4-year cycle dead. Here we are. It's not dead, in my view. And I mean, honestly, think about all the people that said it is over. Bitcoin's going, 200,000, 300,000, yada, yada, yada. It's going there. It's going to take some time. But I am, caution for sure. I mean, this thing could bounce hard, and the old Stephen Perno view of this sort of extended cycle on the power curve where we really could have a boom in 2027. That's also very interesting. So maybe the 4-year cycle will die this year, but I don't see it yet. I see it fully intact. Hey, what's going on, man? Yeah. I mean, this is why we do the deviations. Getting very close to historical lows, right? Of course, you could say that way back in the day, we went way lower from trend, down like 80%. It's not from the high, from the trend, 80% down, 76% down, but really, 60, 50, now 65, and now 40, whatever it is. What is it exactly? we hit 50. We hit 50% from the trend. This is deeply discounted. Again, if we could do the inverse Bart Simpson, stay here for a few months, no one knows. I think it's the halvings. I showed you guys this one's a great chart from Rational Root, right? The Bitcoin spiral. Did I show this to you, Coop? I mean, I think it's the halvings. Genesis having 1, 2, 3, 4. And about a year and a half after halvings, we hit a high. A year after that, we hit a low. It's remarkable. It is remarkable. Does that mean we wait all the way till, November, December to do it again? Who's to say for sure, but they say don't fight the Fed. Maybe we don't fight the protocol. No problem. Yep. Rational Root as well. If you're talking about Rational Root, it's good stuff as well. Don't trust verify. Don't trust verify. Like Permaban said, you can draw all these with ChatGPT. That's to be sure. Yeah. Yep. For Bitcoin, why did Proctor get in there? Here's Proctor. Here's Bitcoin. So max 63%. All right, not from the high, from the trend, 63% below the trend. That was that, this was Peter Zion believing he was triumphing on Joe Rogan. $17,000 overvalued when it was $16,000. 65% down, it lasted from November to January, right? The typical 1 year after the high, 3 months of max pain. We had that very similarly here in the 2018. I mean, almost identical, really. Lasted a little bit longer into April, March. You could argue this was a kind of a different one, the crypto winter, as they called it. Oops, sorry, I'm blocking it, aren't I? This was even more pain. This was really the worst. So again, why would we don't expect a sharp turnaround. I mean, don't be happy if it is, and think about a month from now if we're at 50,000 or something. You're going to have capital, buy more sats. I would say no rush. Yes, that's a great point. Great point. So that brings me back to the old revenue chart. I know I show it almost every time now, but I'll show it again. I don't have the old chart app running. I got to start it up. Give me a second. One second. So I will admit, this is actually the one chart to me that seems the most bullish, that the cycles were over. I keep saying this. It's confusing to me. And that is this one. So you talk about halving and cutting production and how much that matters. So, can you guys see this completely? Maybe I need to change this. There we go. All right, let's just take off everything but the annual. Okay. Notice the halvings. Notice the halving. All right, 3,600 per day, 1,800 per day, 900 per day, 450 per day. Having 4. This one was a massive blow, like dollar-wise. Okay, so this is just new coins, new issuance, new coins. Maybe not use the word inflation since everybody knows what it is. It's predictable. New coins plus fees rolled over trailing 12 months. If you look at the 2013 cycle, right? 800, didn't even hit $1 billion. And this is slow, so it's way delayed. It takes like a year, right, to show you the full year. Didn't hit $1 billion. Here, 6.5 billion. So we're 7 times more, whatever, 7, 8 times higher, right? 7, 8 billion. Here we're 3 times higher than that. So we went from 8 to 3 to not even topped it. This was confusing to me. This is, I would say it's bullish because if you assume that we're going to adopt higher, now of course it could be a big assumption, but if you assume that we're going to adopt higher every time, then mining revenue should be orders of magnitude, or at least some corresponding multiple higher. It doesn't have to be 3x. Maybe it's 1.5x. But this is a very moderate growth in trailing 12-month revenue, right? Due to the sort of the front run of the ETFs, and then of course this big drop. We'll see. What I'm saying is I thought that since this line was not at an all-time high or like, a couple multiples above this, that we would still go. That was the best argument, that the cycles were over, but we rolled over. Is this truly going to roll down like this next year? We'll have to see. But I do agree with you at this point. I mean, it's a huge difference. It doesn't matter if the price, if we're talking $100,000 or a $3,000 for the market, it's a huge cut in production. It's enormous. Correct. The lowest was actually 2017, the lowest point. So we're actually not at a low of the power law. I'll show you. Just give me a second here. I'm pulling it up. So the easiest way to measure, I mean, you could look at the power itself, right? We're around 5.8. We've been there since 2016, but the lowest predicting point is not today. We're not at a record low. And if I could get the damn thing to pop up, I will show you. I'll come back to you on this. Okay. That's a good point. I need to write this down actually because that's a. Yeah, that's a good point. I'll put that up. I'll try to get that for tomorrow. Carl, Carl Stu, let me come back to your comment, but this one first. All right, so just to simplify this, right? Here's the evolution, right? Different than the all-time. So really, it's here is where is where you derive power coefficients. And let's skip 2030. Let's look at today's evolution. So this meets today. All right. So we predict 129K today, February 12th. Although this might be slightly off because somehow I haven't updated this since November. But anyway, it's close enough. If you look at this number, 129.9, it's not the lowest. So it is true that it's usually higher. Let's take off price. Let's just look at the projection. So 129.9 is our number. 129.9. 130, 140. Of course, we're higher. We're getting pulled down by the price. But if you look back here in May, I think it's May 2017, there's the bottom. We could go there this cycle, but that's the bottom. 122.2. So that's the bottom. 122.2. If we go there, then it's depressing times. It doesn't mean it's broken or anything. It just means we've set in a new low. So I would say this is be optimistic that we don't do this. We could still bounce back up like we have here and pulled it back to a different equilibrium. That's my point on that. You had another comment. Yeah. I agree with you, but it's not everyone. This is traditionally yes, but actually as a record, no. This is the record low. 122.2 versus 129.9. So we have $7,000 to work with. And that's hard to hit actually, because the power law goes up $100 a day. It goes up $3,000 a month. And it's increasing, right? Even though, yes, it is dropping as a gross number when it gets pulled down, but still, as you move every day, it's still going up. So this, every day pushes us against hitting this 122. Although, as you said, just so people know what we're talking about here, every day the price is below this dotted line, we're pulling the line down, right? So it's not any stock to flow nonsense. We're just pulling it down. And yeah, this is from November, but it doesn't matter. You get my point. It's the same thing. Thank you. Appreciate it. God bless your family as well. So it's a good point though, Carl, if I can call you that. This is the X factor. But this is crazy, guys. Look at this. I mean, Bitcoin was the power law, the power curve. It's a simple regression function with only the data through May 2017 predicted today, February 12th, 2026, a $122,000 price. It's true, the price is under that. But it's an unbelievable model of what Bitcoin does. Price was $2,000 at the time. This is probably, if you think about it, it is one of the more important charts of explaining Bitcoin. explaining that the network grows according to a power law, not according to an exponential law. The price was 2,300 at the time. It's marvelous. It's a marvelous trend line. Yeah, no, I get you. No problem here. I'm happy to respond to any criticism or points. I just wanted to show you that I've been tracking that. And let me find this damn chart and get it exactly updated because I think it's slightly off from November, but hold on. So it's just it's a wild phenomenon, the power curve. I just forget with each chart how I'm doing it. All right, so that's a hard code I need to fix. Sorry for the dead time. Too many hard codes here. Why is it not working? Come on. Yeah, I'll figure it out later. It's it's slightly. It's the correct number. This is the correct number today. 129.9. Let's double check it. It's probably going to be different, but just if I can. Yeah, I'm off. I'm off because of a. This is the actual correct number. It's 129. 129. 129. So I was a little bit inflated here based on the month loss from November, December, but don't worry about it. It's close enough. The actual curve 129, and you are right. 100% agree with you. It's going lower. I mean, every time this green line is below the black line, we pull it down. But the good thing is we also race forward $100 a day on the curve itself, on the projection itself. So it will be interesting. We'll see if we. The bottom line is this is our base case. If we have a really, really bad year, we got to get to 120. We got to stay above 122.6 on the projection. But I'm kind of thinking we do. We'll see. It's that'd have to be a really, really rough year. We'll see. Where's the curve? Here's the curve. Damn it. So 129. Anything else, my friends? Just to reiterate the point of the little lecture as I started the show is, I mean, blue chip stocks can take huge deviations from their exponential trends as well. they also, these ones that I'm showing you turned out to be pretty good investments, all of them. Buy and hold, no doubt. But these CAGRs are still lower than Bitcoin. Bitcoin's at 40% right now, although it does slightly drop every year. So when people tell you that Bitcoin's volatile, you can tell them Nvidia's volatile, gold's volatile, silver's volatile. Bitcoin? You know, it's not too bad. Trending up on the volatility here. 13.9%. But how high do you guys think we go this? I don't, you know, this was during the boom. I don't think we go during the bust was, wait, where's the bust? The bust was here. Bust was here. 50%. I don't think our stretched out longer term deviations from the trend to get that bad. Maybe 20. Apple's at 8.6% deviation from the trend, under trend. Still doing fine, but you know, it is what it is. All right, my friends, you're going to get access to these charts soon, next couple months. Working on it. As I said, little health stuff with my daughter, so unfortunately, I'm not going to get a stream in tomorrow. Unfortunately, I'll try to post some pictures, maybe some of these, but that's going to be it for me for the week. Yeah. Let's be calm about it, right? I mean, I would love this. We didn't get it on the upside, so why should we get it on the downside? We are getting it on the downside with barely any of the upside, so look, anything can happen, but caveat emptor. Focus on this line over the last couple of years for Bitcoin. I'd say it's pretty remarkable compared to, yeah, Proctor's pretty normal, but where's Nvidia? There we go. Better than Nvidia as far as volatility goes. Yeah, good question. So it's whenever I get to it. My target is 11 a.m. Riga time. It's GMT +2. So my target is 11 in the morning. Baltics, that's 10 in the morning. Paris, 9 in the morning. London. So if you're in North America, it's quite early. If circumstances cause that to differ, it can be any time. Maybe morning America. North and South America. So it just depends, really. I'm not too religious on the timing, but my target is 11 a.m. in the morning, Baltics, and they'll always be on the live stream, you know, on both YouTube and Twitter. I have a guy that helps me cut up some of these as well for, you know, for more quick hits and all the rest. But no, I enjoy it, guys. Thank you for, you know, it keeps me sane as well. We're going to have to see. Bottom line, Bitcoin is a small industry compared to gold and silver. Silver's a $400 billion industry right now, $400 billion for miners a year. Silver's like 40, maybe. Can't remember exactly now. 40, 35. Bitcoin's 16. Just straight up Bitcoin, not any other broader crypto asset. So we got plenty of time. Enjoy the power curve. And that's going to be it for me. Take care, guys. Have a great weekend. Thank you for checking in. Thanks, everybody, for the input today. Perma, appreciate it. Carl, Daniel. And I'll try to post a little bit more tomorrow, but not going to be able to stream. So have a good one, guys. Take care.